Welcome to WCrypto.
Hello, my friends. Welcome back to WCrypto. Buckle up because we're looking at some major price action on Bitcoin today. We've hit yet another all-time high of $76,762 on the crypto index, right in sync with the Fed's recent 25 basis point interest rate cut announcement. Now, in typical bull market fashion, Bitcoin surged right through the key yellow channel that's been guiding price action for the past several weeks. Looking at the daily chart, it's impressive to see how swiftly this rally unfolded. It only took 2 days to break from the lower boundary at $69,500 and shoot past the $73,900 mark, a level we last saw tested back at the end of October. So let's zoom in on what's been happening in the past 24 hours. Yesterday, when Bitcoin peaked at $76,300, we noticed a bearish divergence appearing on the wave trend indicator. Divergences like these, especially on a powerful momentum tool like WaveTrend, can signal potential reversals or retracements. I'll admit I was tempted to short down to the $73,900 area, the upper boundary of our yellow range. But then I remembered one of the core rules in my trading strategy: never short Bitcoin in a bull market. Historically, this market has a tendency to keep running, and today was no exception. Holding off on the short has paid off, with Bitcoin now pushing further into uncharted price discovery territory, bouncing off heavily traded areas like $74,900 and continuing its rise. Currently, I'm staying on the sidelines, without an active trade but with my eyes peeled for new opportunities. And yes, I do feel that fear of missing out. However, since I stick to trading Bitcoin on inverse perpetual contracts, I'm always exposed to BTC rather than fiat or stablecoins. This approach gives me peace of mind, knowing that I'm still benefiting from Bitcoin's overall uptrend even when I'm out of an active position. Now let's pivot to liquidity heat maps. Right now, we're seeing a large pool of liquidity concentrated just above the current price, from $76,800 all the way up to $78,000. The densest area sits right around $77,000. So with Bitcoin so close to these levels, it's very likely that we could see another high in this range within the next few hours. In a bull run, these liquidity clusters often act as magnets, drawing price up to fill unclaimed orders. That said, none of this is financial advice. Always trade at your own risk and follow a well-tested plan. Moving over to the ETF inflows, we're seeing something quite intriguing that adds another layer to this bullish price movement. Over the last couple of days, BlackRock's iShares Bitcoin Trust, IBIT, actually executed consecutive sell orders, while Grayscale's GBTC was on a buying spree. Now, this pattern is far from typical for BlackRock, who is generally known for its steady accumulation of BTC. In fact, the last time we saw BlackRock selling even small amounts was during scattered days from August to October. But this recent move is of a larger scale, around $44 million and $69 million worth of sales, a first in recent months. Now, here's where it gets even more interesting. These BlackRock sell-offs happened immediately following a day of massive inflows totaling $621 million, an amount that stands out even in this bullish market. So what does this tell us? On one hand, the overall demand for Bitcoin ETFs remains robust, as the $621 million in inflows shows that institutional appetite is still strong. But BlackRock's recent sales, especially of this size, may be a tactical maneuver. It could indicate they're locking in profits or perhaps adjusting positions in anticipation of more strategic buys at lower levels. Either way, it's a rare move from a major player, so it's something to keep on our radar for potential future price reactions. Overall, Bitcoin is sitting in an exciting position right now, with liquidity, institutional buying dynamics, and technical indicators all pointing to a strong upward trend. It's no wonder we're seeing this level of price discovery. However, low volume weekend trading is ahead, which can often lead to increased volatility as market makers can push prices around more easily. We could see this impact Bitcoin if any whales decide to test the waters, especially given the liquidity levels positioned both above and below. As always, stay cautious and watch the charts closely. Make sure to like, subscribe, and join my free Discord for up-to-the-minute insights and alerts on this wild Bitcoin ride. And see you in the next one.